everyone. I'm Sam Donaldson, and welcome to another one of our television programs on the World Wide Web. And today we're going to talk about your tax return. It's taxes. We'll talk a little bit about George W. Bush's proposal, but that's not the program. The program is your 1040, or your easy form, or the fact that most of us at the moment, if we haven't filed already, and I'm one of the laggards, are getting all of the documents together, trying to figure out how to do it, send it in. You know, last year, the federal government, 1999 that is, collected over $1 trillion in individual income taxes. I'm not talking about business taxes, excise taxes, the rest. $1 trillion plus. How much will the federal government take from the taxpayers? And by take, I understand it's our obligation as good citizens, but how much will it get? Well, I don't know. We don't know. I mean, maybe all of the guys on the stock market, the high rollers that had a lot of capital gains the year before, won't have them this year. I cannot tell you anything about that. And maybe even though personal income has been rising, it won't be reflected that much. But over $1 trillion in 1999. Well, I'm not the expert on all of this, but we have a couple of people with us today to answer your questions and my questions and try to make a little sense about the forms that you may be trying to fill out right now. Joining us is the co-author of a book which is titled Taxes for Dummies, 2001 edition, David Silverman, who joins us from New York City. Welcome, David.
Good afternoon.
Well, I'm one of these dummies. I mean, this book is meant for someone like me, I take it.
Well, you know, Einstein was fond of saying that the most complicated thing he ever encountered was the income tax. So if you feel that way, you're in good company, Sam.
E equals MC squared.
Absolutely. Evidently, that was simple mathematics by comparison to Professor Einstein.
Also joining us is the Senior Product Manager for TurboTax, which is the #1 best-selling software tax preparation form from San Diego, California, Elizabeth Cabrera. Welcome, Elizabeth. Nice to see you.
Good morning. It's a pleasure to be here.
Well, I take it that you would prefer to have everyone just, you know, plug in the software rather than go to a preparer or sit there and fill out with a pen their own forms.
Well, I'll tell you what, we sure make it easy. You don't even have to get in your car to do your taxes. You can actually just load the software. The software walks you through step by step. TurboTax asks you easy questions, and you don't even need to know anything about the tax forms. You mentioned the 1040. All you need to know is how to type and how to use your mouse, and you can do your taxes in no time.
So what if there's a glitch in a particular software, TurboTax, that I buy and put in, and it doesn't figure it right?
Well, TurboTax is 100% guaranteed. We guarantee that all of our calculations are accurate. In fact, if you file your tax using tax software like TurboTax, the chances of you having an error in your return are less than 1% versus the 20% that the IRS sees with the returns that are prepared by hand. So you can really be sure that you're going to file your return accurately and quickly, and best of all, easily when you use TurboTax.
Well, David Silverman, I'm not trying to get a dispute going here, but do you agree that if you just to plug in the software, you're okay?
Well, let me take issue with something that was just said. These programs are great for doing the number crunching because you take 2% from this line and add it to 9% of that line, and it's marvelous to save you all this time in the number crunching. But the problem with the software, they can't think. They don't know if you're entitled to a certain deductions, and some areas are just too complicated for the novice. What I would suggest is someone who should prepare their own tax return and then take it to a pro to see if they've made any errors or they omitted something. And that way you'll get a second opinion.
Now, you say you take it to a pro even if you prepare it yourself. But if you're going to take it to a pro and go to that expense, why not just dump the whole thing in his or her lap in the beginning?
Well, pros like that. People come in with the proverbial shoebox full of receipts. You're going to pay very high accounting rates and get back bookkeeping. The more you can do yourself, the lower your fee can be. So I would suggest that do all the number crunching, then go in and get some good financial and tax advice from the pro and pay them for an hour or two at a time and let the pro do the thinking and let the TurboTax and the software do the number crunching.
Okay, we're going to talk about some of that advice. We're going to get it from you free and also from Elizabeth. But Elizabeth Cabrera, let's go back to filing. It's becoming much more popular to file electronically, isn't it?
It is. In fact, the IRS estimates that 42 million returns are going to be electronically filed this year, and that's up from last year. It was about 36 million returns. And the reason for that popularity is that there are great benefits to electronically filing. I mentioned already that you can be assured that the errors are going to be fewer if you electronically file, but the greatest benefit is that you get your refund back faster. And about 70% of U.S. taxpayers actually get a refund, and I'm sure that they're very anxious to spend that money. And when you electronically file, you can also have that amount automatically put into a designated checking account, savings account, which also saves some extra time.
Well, am I correct, Elizabeth, that for the first time in this filing year, if you file electronically, you don't have to send in your paper W-2 or another IRS form with your signature on it?
That's right, Sam. The IRS is really working hard to encourage people to electronically file. So what they've done this year is they have really made it essentially a paperless experience. By working through tax preparation software like TurboTax, you can actually create your own PIN number. It's a self-select PIN program that you use some information from your last year's tax return, specifically your adjusted gross income from last year and your total tax due, or the amount owed, and then you select your own PIN number, and that eliminates the need to send in any additional paperwork to the IRS. So there are no trips to the post office. It's basically all completely paperless, completely electronic.
David, let's now talk about some helpful hints for people who make out their own returns, whether they take them to someone else or not. Let's begin with just a simple question. Should we itemize? Should we take the standard deduction? What do you advise?
Well, that's strictly a number crunching. You have to make a list, see which way you make out better. If you are a homeowner, the way to go is to itemize. You can deduct your mortgage interest, real estate taxes. If you have unreimbursed employee business expenses, you can deduct that. And you compare the two ways of filing. Whichever one reduces your tax, that's the way to go.
Well, I mean, there are a lot of things. For instance, student loans. Now, that's up this year, isn't it? From $1,500 to $2,000 can be deducted. But how does the student know that? Where are they going to go get that information to say, well, this year I'm better off if I itemize?
Well, hopefully they'll get their hands on Taxes for Dummies. Forgive me for that shameless
That's all right.
And our book is a source. If people want to know what's deductible, they can just zero in right in that. They turn to the index and say, well, I have a student loan. What's the tax ramifications of that? And they can zero right in to see if it's deductible or not.
Now, I saw figures the other day that say that the auditing is at the lowest it's ever been. It's 50% lower for this past year than it was the year before for various reasons. So what do we say about that? Is it easier to get away with not remembering a particular piece of income? Or
well, that's sort of a misconception. First of all, the IRS does a better job from their perspective on who they decide to audit. Only about 8 or 10% of the people who get audited don't owe additional tax. About 30 or 40 years ago, that was about 45%. But in this golden age of computers, everything that you earn, such as your W-2 earnings, salaries, interest, dividends, mortgage interest, if you sell stock, is all reported to the IRS. And the IRS has a computer system down in I think West Virginia, the size of Yankee Stadium. And they match everything reported to them with what's reported on your return. And if you omit something, you can expect to hear from the IRS in about say 12 to 15 months. And I believe last year the IRS decided to become pen pals with about 10 million taxpayers as a result of this matching process.
Elizabeth, you've already said that if your software has a glitch in it and makes a mistake electronically, you're back at 100%. But what about the auditing? What do your customers tell you about being audited?
Well, as I mentioned earlier, when you're using tax preparation software, you're less likely to make an error. And we also have a process that you can run through that lets you know if you've entered anything that might trigger an IRS audit. It's called audit alerts. So the software actually walks you through situations that might raise a red flag with the IRS.
Explain that. In other words, you take the norm, for instance, for deductions, or the norm for for this or that, and if on my return I'm putting in a figure that is above the norm, it warns me and says, eh.
That's right. We have about 300 tax experts who year after year understand what the IRS looks for. And what we do is we actually customize the audit alert for the user, for the taxpayer. So if I've entered something that looks a little suspicious about my home office deduction, TurboTax lets me know about that. And you also mentioned comparisons. We do have a U.S. average comparison that lets you see what people in your tax bracket have deducted. It lets you see how much they've made in charitable contributions, so that you can get a good idea if you're in line with other taxpayers. So we really make it easy for you to make sure that you've filed your return accurately. You're not going to, cause a red flag with the IRS. We also let you know if you've overlooked any possible deductions.
Well, David Silverman, but that should not deter me if I am legitimately using a room in my home as a home office from putting it down simply because I might raise a red flag.
That's true. I had a professor of taxation who was fond of saying that if you get audited and don't end up owing the IRS a lot of money, you had a lousy accountant. There are a lot of gray areas and conflicting areas of the code. One section of the tax code conflicts with another. Sometimes the IRS says that you can't claim a certain deduction, and the courts say that you can. If you're going to resolve every issue in favor of the government, I doubt if you're going to get a letter of commendation from the president.
All right, explain that from the standpoint of intent and what the law says. Quite clear there would be some things that, if proved, would be absolutely fraudulent. I mean, the intent to defraud. But if I honestly believe that I'm entitled to this deduction and I put it down and the IRS says, wrong, we don't think you are, that's not a criminal matter, is it?
No, it isn't. That's a matter. That's strictly an interpretation of the law. You have different circuits claiming different types of deductions are deductible. You have the IRS claiming one position. The law is ambiguous, unclear, and I guess you've spoken about this many times on your programs in the past. And if you disclose something on a return, say, I'm handling it in this manner, that's not fraud. What Mr. Rich did, I guess, is fraud.
Well, yes. I mean, although he has never faced the bar of justice, of course, and he
true.
Never will on that particular matter.
I would like to add something. The IRS is moving away from auditing deductions. They determined that they can raise more money and make sure that taxpayers are complying with the law by auditing income. And in the last few years, they're paying special attention to small businesses, people who receive their income in the form of in tips, freelance folks, small businesses. So they're zeroing in on whether these types of taxpayers are reporting all their income.
I saw a piece in the newspaper the other day that suggested that the administration or the IRS is targeting the working poor for audits. Can that be right?
Well, it's true. There's been a massive amount of fraud with these refund mills, sort of these backstreet operations that set up income tax preparation services in low-income areas, and a lot of people are claiming this earned income credit when they're not entitled to. And I think there was a GAO report a few years ago saying that the fraud in this amounted to $5 or $10 billion. It was vast.
Elizabeth Cabrera, back to electronic filing, hacking, people getting in there, reading your material, even changing your material. There have been some recent, very high-profile cases of that.
Well, with TurboTax specifically, we use standard SSL encryption, so any information that you're transmitting over the internet is completely encrypted so that it protects your personal information. And I'm aware that there have been some recent reports about the IRS and their security, and I know that they've taken steps to address that.
That's the mother lode. I mean, the IRS has a problem with hackers. Where are we going to go?
And they have addressed that, and we feel that electronically filing your taxes is very secure, especially when you consider the fact that you're going through, when you use TurboTax's electronic filing center, and all of that information is completely protected through 128-bit encryption, and then it's transmitted to the IRS through a direct connection, so that you can feel that your tax data is secure, through the transmission.
All right, hold it there. We'll be back with Elizabeth Cabrera and David Silverman in just a moment. We'll talk more about taxes. We'll get into some more of the details. But first, I must ask Vanessa, have you filed your tax return yet? Oh, producer extraordinaire.
I have filed. However, I am waiting for Uncle Sam to return my money. I haven't seen anything from him yet.
Well, did you file electronically or did you send it in the paper?
I didn't. I used a preparer, which I imagine my taxes are probably the easiest in the world to prepare. However, I like to leave it to the hands of the professionals.
So you didn't itemize, in other words?
No.
Well, why don't you do it yourself? I mean, you're a pretty smart cookie.
I know, but this is one particular area where I'm intimidated. I would prefer to pay my small amount, which I do, because it doesn't take them long to do it, and leave it into the hands of the professionals. I feel like if I do that, maybe I have a little bit more security of getting it right and also not being audited, which that's my own perception. I don't know if that's the case.
You and Einstein. Thank you very much, Vanessa. I myself do my own taxes, at least most of them. We have a situation in our farming and ranching operation, which is the family operation since 1910, ladies and gentlemen, in New Mexico, that obviously I use professionals to take a look at. I mean, I think a depreciation schedule, I'm with Einstein there. Trying to figure out a depreciation schedule for me is beyond the pale. But other than that, I like to do it because it's one way, frankly, to keep up on where has the money gone this year. But we'll be back. First, we have this little message. Do we have a message, Vanessa, a little promotion?
Sure do.
We do? Here it is.
Questions to us, fellow dummies. You can go ahead and email us your questions. CNN Live. Okay, I'm a dummy when it comes to taxes. Leon is brilliant, but you can email your questions to CNN Live at CNN.com.
This morning as compared to yesterday. We expect that we get down the road. Email us right now at cnnlive@cnn.com. We'll get to your questions just ahead. Questions. David Silverman is co-author of Taxes for Dummies. It's one of the popular Dummies series of instructional guides. He also represents clients before the Internal Revenue Service, and he has served on the advisory board to the IRS commissioner, so he knows what he's talking about. He joins us this morning from our New York bureau. How you doing? Good to have you with us today.
Good morning.
All right, let's begin at the very beginning here. Now, how should anyone who's sitting at home right now deciding whether or not to file their own taxes themselves or actually have someone else prepare their taxes for them, how should they make that decision?
Well, if something dramatically changed in their financial life, they should sit down and say, hey, is this something a whole lot different from last year? In other words, maybe they switched jobs, maybe they're a new homeowner, maybe they went into business for the first time. So if you're just out of school and this is your first tax return, you can sit down and take the form 1040 Easy and file it on your own. But once you drop out of the easy category, things in our tax code get rather complicated and rather quickly.
Okay. So then if you are going to go ahead and decide and prepare your own taxes and go through everything, what's the first step? What should you first do?
But before you do that, maybe if somebody might want to prepare their own tax return, then take it to a professional for a second opinion. But the first thing people have to do when they sit down to prepare their tax return is make sure they have all their tax data, their W-2s, their 1099s. Have they gone through their checkbook to see that they've tabulated all their charitable contributions? If they're a homeowner, do they have the slip from their bank indicating their mortgage interest, the real estate taxes they paid? Have they gone through their checkbook to see if they have all their unreimbursed business expenses? If someone doesn't report all their income in about a year, they can expect to receive a letter from the IRS saying, hey, you didn't report all your income and you owe additional tax and penalties. And I think last year the IRS became pen pals with about 10 million taxpayers.
That's a good way of putting it. Well, let's get to some of these taxpayers who have been emailing us this morning. Let's go to the first email that we have. What do we have? No name on this one, but it says, I haven't filed since 1991. What are the chances of not having to pay heavy penalties if I do file? Should I go to a tax attorney? Or maybe do not pass go, just go straight to jail? What do you think about this case here?
Well, for those folks in the Mark Rich category, the IRS has a policy. If you come forward and voluntarily backfile all your tax returns and make a provision to pay what you owe, they'll assess penalties, but there won't be any criminal prosecution. Now, if someone has a good reason for not filing, such as illness. I mean, I once had somebody who was an alcoholic. They were on a lost weekend for 10 years, and we backfiled and had all the penalties abated. But the problem with not filing is the Social Security people don't know anything about you. And a whole bunch of people don't file, and as they approach Social Security age, they discover they haven't accrued any Social Security benefits.
All right, so I guess you recommend this person to go to an attorney in this case, then? Huh?
Absolutely.
Okay, all right, let's get to the next email. We got a couple of more coming up here. What documents do I need to prove guardianship to the IRS?
In other words, is this a divorced couple? It's hard to say. Usually a problem arises with a divorced couple who is entitled to claim the children as dependents. And the rule is the custodial parent, but I would need more from the questioner to zero in on that.
All right, let's go to the next question, because this next one is an area where a lot of people get tripped up here. I have a little office in my home where I do paperwork and research 2 days a week. Can I deduct any expenses as a home office deduction? This is from Lisa in Westport, Connecticut. Now, this home office issue is one that trips up a lot of people, doesn't it, David?
It does. Basically, the law changed 2 years ago that it had to be the primary place. It no longer has to be the primary place. It has to be a place that's helpful where you perform administrative services. So the answer is yes, you can claim the deduction. Employees have to have overcome an additional burden. It has to be for the convenience of their employer.
Let me ask you one final question. What are the most common mistakes that you see people make that they shouldn't make?
They let April 15th go by, or they rush at the last moment and they forget a whole bunch of deductions. I think a lot of people do themselves a disservice, and by not claiming all the deductions they're entitled to. I guess people really don't like this whole bookkeeping chore that the government puts us through. But that's the only way people can ensure that they cut their tax bill to the absolute minimum.
Well, here's one book they should keep. It's Taxes for Dummies. David Silverman, thanks much for your time this morning, and hope that you gave some folks some good advice they can use. We'll be back in a moment.
Thank you.
More in just a bit, folks. Don't go away.